Hey, this is Warren Redlick with the AI stocks report for May 15th. The stock index, the AI stocks report index is up to 1102 or up 10% from where we started on April 30th, 2% on the day. You can see some big performers, a couple of the stocks that didn't really move that much. We're going to get into it. Are you ready? Let's go. Just a quick update that I have a new video that will be live on Saturday. If you are a supporter as a YouTube channel member, ex-subscriber, or Patreon supporter, you get early access to this video. It's live now. It's a systemic exception, systemic risks facing AI stocks that depend on certain things for their growth stories to be true. And is Tesla an exception to that systemic risk? That's going to be live on Saturday. Please consider supporting me as a YouTube channel member, ex-subscriber, or Patreon supporter in order to get access to that video right now. The big idea behind the AI stock reports is that we have several companies that are really critical to the AI growth story, and you can invest in them, and we track them here. One part of the story is buzz. What happened on Wall Street yesterday, and what is the industry saying about it? What is Wall Street saying about it? So Broadcom was up 5.5%. They had the strongest move of the day. They're like a sort of in the space of Nvidia and AMD, but they deliver custom AI accelerators with Google as a big customer, several other customers, and they also deliver some critical networking equipment, a critical part of the supply chain that I talk about in my other video. In particular, what may have driven the stock up was an influential Wall Street analyst giving it a price target increase. Over the long term, Broadcom is just an essential part of the AI growth story, so it's not surprising that it's up. We get a lot of volatility with all these stocks, but there's some reasons why it may have been up more than others today. TSMC was also up a lot after raising its long-term semiconductor market forecast. We're going to cover that in a minute. Investors are rewarding its unmatched position in the foundry space for providing semiconductors, for basically being the biggest chip fab that is another critical part of the growth story for AI companies. TSMC might be the highest conviction way to own the physical layer of the entire AI chip ecosystem, although I might make an argument for ASML on that. Nvidia was up big. They have an earnings report coming in only 5 days. Jensen Huang was in China. He made a couple of public statements in China that may have helped boost the stock. Nvidia, like TSMC and some others, they're sort of core to this AI growth story. So whenever there's good news, they're going to go up. But there was specifically Jensen Huang appearing, and this earnings numbers are coming, and that's going to create additional volatility, often upside volatility in advance of an earnings report. I think we've seen positive earning reports from AMD, positive earning reports from Palantir. So what do you expect to happen with Nvidia? We're probably going to see another positive earnings report beating expectations. And so maybe some people are trying to get ahead of that. Palantir back up a little bit. I think Palantir is just seeing a lot of volatility after their earnings report. They're still not up anywhere near what they should be after the huge earnings report they had. I haven't seen any particular news that would cause Palantir to be up or down. It's just the volatility that we get. Come see the volatility inherent in the system. So what may have driven TSMC up so much was that they released a market forecast of $1.5 trillion by 2030, upgraded its outlook for the global semiconductor market, now projecting it will exceed $1.5 trillion. AI and high performance computing are expected to account for 55% of that total. I think that might be conservative. They are saying that they see much stronger, more sustained demand for advanced AI chips than they previously anticipated. AI and high performance compute is now seen as the dominant growth driver. And you can see this isn't just TSMC, but the entire supply chain. Again, big video coming tomorrow about the AI supply chain and systemic risk that results from that. This is core to that. And if you support my channel as a YouTube channel member, ex-subscriber, Patreon supporter, you get early access to that video. TSMC is expanding capacity aggressively with strong yields on leading edge nodes supporting the ramp. This is one of those things, execution risk. Is TSMC going to be able to execute on its expansion? Is the supply chain going to be able to execute on the supply chain needed for TSMC to be able to aggressively expand? A lot of stuff going on here, but right now the market is confident or showing confidence in TSMC being able to do that. Although in some ways, I would argue TSMC their stock might be underpriced. And check out my options videos. I talk about that in my options videos. In our pre-IPO companies, Anthropic released a major policy paper on the US-China AI competition. I read it. I was not impressed. I don't know how you do a policy paper on competition between the US and China and AI, and zero mention of China's advantage in electricity generation. I don't know. Like, I really struggle to take Anthropic seriously. We just had their CFO did a podcast. I don't know if I've watched completely the whole thing, but I watched most of it by now, and singularly unimpressed by this guy throwing out buzzwords left and right. And just to me, not a credible presentation. I'm the only one who sees that. I think a lot of people are seeing very positive impressions of that CFO performance on the podcast. To me, it was like, and I talked about this yesterday. I was not impressed with that podcast. Anthropic outlines two paths: one where the US maintains a meaningful lead through tighter controls, and another where gaps allow China to close the distance rapidly. Honestly, like, did Claude write this? Did humans write this, or did Claude write this thing? Read it. I definitely encourage you to read it. I think the AI competition is important. I think fundamentally, like, if America does not produce more electricity, China's going to win. Apparently, there's some deals being made that will give China more access to some of the, chip hardware from Nvidia and other companies, but not the leading edge of chips. They did do a good job of laying out why American AI companies have such a big advantage right now over the Chinese AI companies. But ultimately, my take on this AI world is inference is going to matter a lot. Whoever can deliver the most inference compute at reasonable cost is going to be the bigger winner. And China has the electricity generation to be able to deliver inference compute at lower cost and higher volume and higher scale. Like, if you can't deliver the inference compute, it doesn't matter. And I don't think they really talked about that at all. So I thought this was a particularly weak policy paper. Who are you? How do you not mention China's electricity generation advantage in a policy paper talking about AI competition between the US and China? I'm just, really? And these are guys who are, like, trying to tell the Department of Defense how they're supposed to do their jobs, and we're not going to let you use our AI for this. Like, you guys are policy leaders. I don't understand the why Anthropic is given that much credit. And to me, like, when I'm looking at potential IPO companies that I might invest in, yeah, I know Claude Code is great. I think Codex is really good at code. SpaceX AI has released an early beta version of Grok Build, which is a new coding version. I found Grok 4.30 pretty good at coding already for my limited uses. So there's more coming from Grok. There's a lot of competition in the coding space. It's very early yet, so it's not clear that Anthropic's really going to solidify its lead. So this is Anthropic and OpenAI are the most vulnerable of these leading companies, and yet they have these huge valuations. Can you secure the compute? This is where I thought that CFO on the podcast was like total bullshitter. Like, his position on their access to compute, like, no, they're vulnerable. Their cost of compute is inherently higher than Google, which has its own compute, and XAI, SpaceX AI, which has its own compute. OpenAI and Anthropic are dependent on others for their compute. That raises their costs, and that cost comes at high margin. That's a fundamental issue. News is that the paper positions Anthropic as an active voice in the national security and export control debate. I hope nobody's taking them seriously, because I was not impressed. Final thing for today's video: Wells Fargo raised its price target for Broadcom from $430 to $545. That seems a little late because Broadcom's already trading at about $440 a share, but okay, they see it going up. The firm introduced a new pluggable gigawatt-driven framework that ties AI silicon demand directly to physical data center power capacity. Wells Fargo concluded that AI-related semiconductor revenue is running 30 to 40% higher than prior consensus expectations. That is applicable to all the semiconductor businesses, not just Broadcom. Wells Fargo raised fiscal 2027 and 2028 revenue and earnings per share estimates versus consensus. Broadcom's position in custom AI accelerators, high-speed networking for AI clusters is essential. They're an essential player in this game. Even though they're not as big as Nvidia in the chip game, they have other roles here, and their role in making custom chips for companies like Google and others is a pretty big deal. I think Meta also. So you're seeing analysts on board. This is one of those things where analysts seem to trail the story. The AI chip thing is going up, and Wells Fargo, oh, nice, thank you for joining the party. But they did a big increase to $545 a share. Just a reminder that I'm doing a weekly video on options, and my most recent video is up yesterday, day before yesterday. It is available for paying supporters, YouTube channel members, ex-subscribers, Patreon supporters. Get access to this. I think it helps you understand, first, the long-term call option strategy I talk about, and I talk about my recent big options trade, but also I think it gives you a perspective on these companies and their long-term prospects that I don't think people are seeing. There's one particular company in there that when you look at their options numbers, my options metric for that company going out in the long term, you just got to scratch your head and say something doesn't fit here. And I think that might help you understand long-term investing in these companies. Please like this video, share, and subscribe. And thank you so much for watching.